This week, we're talking monthly trade data, retail prices, consumer sentiment, and supply and demand numbers. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner, with us as always, livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
It is a big week of reports, and there's a lot to get into today. But first, let's recap what happened this week in the markets.
Yeah, starting on the cattle side this week, Meghan, those live fed cattle were roughly 20 cents higher on the week, so not a lot higher. That puts them nearly $3 above where they were a year ago at this time. Those feeder cattle auctions were anywhere from $1 to $3 higher this week. On the futures side, the December live cattle futures contract was up 40 cents. The November feeder contract was basically unchanged on the week. We did see corn down 8 3/4 for that December corn futures contract. On the beef side, choice box beef prices were higher this week. $8.30 puts them $7 above where they were a year ago at this time. Pretty strong rib prices this week, I think, really helped on that choice box beef price. On the hog side, cash barrels and gilts were down 35 cents this week. The December lean hog futures contract gained $1.25, and the pork cutout value was unchanged on the week.
Scott, as we take a look at what's going on right now in the markets, we've seen some strength again on the cattle side of things. It's been the hog market, I would say, it has been lackluster at best in general. Are we looking at two different stories right now when we're thinking about supplies and available supplies and maybe what that is doing in the markets?
So perhaps I think when we look at the cattle side and we back ourselves up to July, we certainly saw some correction, trying to happen. And you look at what these markets have done in the last month or so, and we've almost erased all that downside that we had in cattle markets. I think a lot of this has to do with just how strong can box beef prices stay right now, and where consumers or what consumers are willing to pay. On the pork side, though, you look at hog prices, and we've really steadily moved up over that same July through October period, where we saw a lot more volatility in cattle prices. So I think it's put hog producers in an okay position from a profitability standpoint. For me, I think it's going to be all about just how much growth in pork supplies continues as we go forward, and on the other side, how much contraction we get in beef production. And we'll save that story for a little bit, given USDA's monthly WASDE report today. But those are the things to me that seem to be at play.
All right, let's talk slaughter numbers as we take a look for both cattle and hogs. Kind of a slower week on both fronts.
Yeah, it is, Meghan. So below 600,000 head of cattle this week. USDA is telling us for the week ending October 12th, a run of 586,000 head of cattle this week. That is 25,000 head less than we did last week and 30,000 head less than we did last year. And on the hog side, a run of 2.584 million head. So that is down 2,000 head from what we did last week, down 24,000 head from what we did last year.
And when we take a look at those year-over-year comparisons, how are those holding up?
Yeah, so we're still talking about cattle slaughter being down 3.8% and hog slaughter being up 1.1% when we look at those year-to-date slaughter percentages.
All right, let's start going through these reports. We'll kick off with monthly trade data. As you take a look and recap that, what are some of the things that stand out for you there?
Well, it's certainly a good month for pork exports. When you see what news we got out of the August 2024 trade data this week, so 560 million pounds of pork exports left the United States. That was 33 million pounds above what we did August of 2023, up 6.2%. These are familiar countries at this point. So thank you, Mexico, up 9.5 million pounds. Some Central American countries as well. I look at Mexico, Japan, China, Korea, and then I lump everybody else together, and then everybody else was up 30 million pounds. So that had a lot to do with the growth that we saw on the pork export side. I think that jumps out as the most positive news out of the report that we got. Um, Second, as you and I've talked about quite often, when we look at beef imports, so we imported 421 million pounds of beef into the United States in August of 2024. That's 87 million pounds more than we did August of 2023, up 26% relative to August of 2023. When you look at that year to date number, we're now talking about 524 million pounds more beef entering the US than did at the same period of 2023. So 21% higher beef imports year to date. That's two on my list if you ask me about the things that jump out. And then when we look at three, so we actually are down in beef exports. Not a big surprise, I don't think. Down 22 million pounds. Total exports of 238 million pounds in August of this year. When you look at the year-to-date number, down 75 million pounds year-to-date 2024 relative to 2023, or down 3.6%. I still say high prices, I think, have a lot to do with slowing that export trade for us in the beef side.
And I would assume pricing is also coming into play with the amount of beef that we're importing as well.
Absolutely. There's been no change. When you look at, we still need lean beef to go with what are some pretty heavy carcasses these days. So I think that's going to continue as long as these prices stay where they are.
All right, let's talk retail prices. As we take a look at September numbers, definitely showing what's going on in terms of pricing with what we're talking about in terms of supplies and availability.
Yeah, absolutely. So starting on the beef side of the equation here for a minute, I will say, I don't know if high prices are good news or not, and for consumers, they're not. However, when you look at what we're doing, so September 2024 choice beef retail price, $8.41 a pound. That was up 23 cents relative to September of 23, or 2.8%. So higher retail prices. We've talked a lot about needing to push wholesale box beef prices higher. Look at what we're doing on the retail side, and maybe that's in the mix. For me, the thing that jumps out immediately is ground beef. So it's $5.67 a pound, September of 24, up 56 cents from where we were a year ago, or 11%. So when you talk about more beef imports, I think that goes along with ground beef prices have continued to be high, especially with what's been lower levels of beef cow slaughter as we've gone through this year. On the pork side, so $4.95 a pound for the pork retail price for September, down 2 cents relative to August of 2023. I think we're seeing much more of this slowdown, if you will, or lack of increase in the pork retail price. So slowing inflation in some of these food categories, showing up in pork the most right now. I wanted to make sure that I reported for you that sliced bacon prices were down 13 cents September of 24 relative to September of 23. So cheaper bacon, it looks like, is what we're seeing out of the report this week.
Not that much cheaper. As we take a look at these, we're talking about these prices still exponentially higher than where they've been in recent years. You mentioned a kind of a slowdown. Are we seeing that a little bit more as an overall trend, that trajectory higher? And obviously on pork, because it's lower this month, but on beef has slowed compared to those year-over-year price increases that we've been talking about for a while.
Yes, we're slowing. I think when you look at the overall CPI numbers that we got out this week, even the overall food category is slowing. It's been a little more volatile. Now, I think your point's well taken here, and we need to emphasize this. So in September of 2015, we had a $6.23 choice beef retail price, and September of 24 was $8.41. So we're much higher. And a lot of that happened as we got into 2020 and we're going through the worst of COVID, where we've really popped up, and then high feed costs added on top of that. Pork retail price in September of 2015 at $3.92, and we're now sitting at $4.95. So we're seeing all of those prices having lifted a lot relative to what they were pre-2020 in particular. And I think that still has consumers' attention. The prices are high. The fact that we're slowing the growth is the good news, I think, that we have to talk about from that standpoint. But as I think we've seen many times historically, and I say decades in this discussion, it's very difficult for retail prices to move lower. We tend to see them adjust up and then tend to be flat for a period of time. So maybe we're starting that period where we don't see a lot of additional increases in those retail prices.
Consumer sentiment also out this week, and some negative in there, but also I think if we're looking at the big picture, a little bit of positive news.
Yeah. The October preliminary consumer sentiment came in at 68.9, down 1.7% relative to where it was in September. So the negative side, if you will. And I think, you look at that report and we're seeing a lot of consumers, again, just generally worried about high prices, frustrated over high prices. So I think that has a lot to do with what October looks like thus far. But let's understand that consumer sentiment index is 8% above where it was in October of 2023. So I don't want to act like this is all negative news, but I do think the numbers tell us, consumers are getting weary of all these high prices that they tend to face today. So we want to watch, and this is where I think beef markets in particular, I think we continue to see them have to tighten from a supply standpoint. And does that mean prices get too high at some point? And we've had this conversation, frankly, for months at this point, and thus far consumers have been willing to stay fairly strong in terms of their demand for beef. If that were to switch, then that's some of the concern or uncertainty that there might be out there in these markets today.
I think that the maintenance level, I'm going to call it, of demand, that it's remained steady, like it's been at this solid level, is quite impressive, thinking about where consumer sentiment is, to think about where retail prices are. And again, I would assume testament to quality, and people like having that product in their diet and in their meal planning.
Yes, so certainly isn't the typical historical response. We would tend to see those prices of beef moving much higher and find consumers switching more readily than seems to be the case today. Why exactly that is, I think, is very hard to identify, but certainly the quality of beef that we have today has to be helpful to that. Just the change in the average consumer as well, I think is at play as well. So it is amazing how good demand has been. I would be curious where we sit today had we not had all of the other inflationary impacts going on at the same time. It was a little easier to, in some ways, ride along, if you will, with what were higher prices for many things for consumers.
All right, supply and demand numbers out today. As you take a look at USDA's configurations and the numbers that came out this week, what do you take from this?
So I think the big one out of this report that caught my attention, and maybe I'm just too much in the weeds of the numbers, but USDA raised 2024 beef production in the October report to 27.1 billion pounds. That is actually going to be 0.1% above the 2023 beef production level, if we in fact see that at the end of the day. I just remind everyone to think back to where we were in January of this year. And I don't have this conversation that I'm unhappy with USDA or they didn't do a good job. I think everybody was in a similar place in terms of these projections. But we'd have been down 1 billion pounds in terms of beef production in 2024 relative to 23. And that was going to get us higher prices. When in fact, when you see what we're doing, we're actually, and again, only up 0.1%, but that's a big change from where we started. And we have imports up 500 million pounds. What a difference in total supplies relative to what we would have thought earlier. So I think that was a big change. Now, USDA also at the same time has raised their 2025 projection 300 million pounds this month, which would put it at right at 26 billion pounds. Now, I keep trying to say I think that's the number I want to keep watching, because does USDA keep revising that up? Where do these cattle weights go? Where do cattle slaughter numbers go in 2025? So if we aren't down, so USDA is basically saying we'll be down 1 billion pounds in 2025. If we are down 1 billion pounds, I think that has increases the probability of cattle prices staying high. If we end up with 2025 not down 1 billion pounds relative to 24, maybe that's harder to keep cattle prices higher. So you asked me what I see. That to me is very interesting, and not that I disagree with where USDA is at, but just to remind us that we basically pushed down a year this decline in beef production, and we're still not building the herd. USDA did raise fed cattle prices roughly $1 both 2024 and 2025. They have 2024 at $1.86 and 2025 at $1.87 for annual averages. So they're saying not a lot of growth in those prices in 2025. Again, I don't know that I disagree with where they're at, but hang on for some potential variability. Otherwise, I think when you look at what USDA did this month, not a lot of big changes. Pushed up chicken production a little bit in 2025, but otherwise pretty modest changes on everything else.
How high can cattle weights go if we're still talking about we're not growing a herd, but we're potentially producing more beef than we did a year ago on a tighter herd supply? I just like it the math has to add up somewhere, right? Like, so my deduction is that's where we're getting the extra beef, right?
So without the 20 to 25 pound higher carcass weights we see today that have just stayed with us, we'd be in a much different place in terms of beef production. And I'll say, don't forget that came as corn prices slid towards $4. So I think feed costs have mattered in what's been these higher weights, along with feed yards happy to keep yards full when they know there are fewer cattle. I will say in my entire career, it's the question I probably got the most often of, can these weights keep going higher? And they've gone higher throughout my career. Can they keep going higher? I'm not sure the answer is yes to that. But when we're short cattle numbers, this is one way to get more beef to consumers.
Well, there will be plenty to watch as we go through the rest of 2024 and into 2025.
And if I was a producer, I would certainly try to figure out what the risk is. And you and I often talk about using risk management strategies. The WASDE report today just reminds me that there's both upside and downside. And I'll always say when we're at record high prices or near record high prices, there might be more downside risk than upside potential, but make sure that you're thinking about how to minimize some of that price risk that I think we're going to continue to deal with as we start to think about 2025.
All right, Scott, no reports next week, which means I think we should open it up to questions. If you have questions for Scott Brown, send them to us and we can make sure that's our focus of the conversation next week. Otherwise, it'll be a really short and sweet episode.
As long as there are questions related to beef and pork markets, right? Let's at least hem in the questions they can ask.
I mean, I think curveballs are welcome. I'm open for it, whatever. Scott will be prepared and I will be here to deliver them. Right?
That's right. I'll be ready.
Okay. Scott, it's always great to see you. We'll talk to you again next Friday.
Sounds good, Megan.
So I have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens every day, twice a day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.